Right, hello everyone, welcome back. So, it's been a while, so let me tell you exactly what we've seen in these last couple of days. So, we've actually seen a notable shift in the market sentiment as a whole, and after weeks of uncertainty, investors have actually started leaning back into the risk assets. So, stocks have actually continued climbing, and crypto has actually staged a strong recovery. Now, oil prices have actually settled down, and the attention now is shifting towards the next big catalysts. So the Federal Reserve policy and the start of the earnings season. So in these next few minutes, let's break down everything that has happened across the global markets, what it means, and what everyone is watching for next. So let's break everything down. So the biggest story right now in traditional markets has actually been the continued strength in the US equities. So Nasdaq once again has actually led the way, and with technology stocks remaining the clear market leader. So the S&P 500 has actually continued pushing even higher as investors became increasingly optimistic about corporate earnings and continued investment in AI technology. So what's actually interesting is that the rally is still being driven by a relatively small group of companies, and the investors actually continue pouring money into businesses connected to AI infrastructure, so including semiconductor manufacturers and cloud computing providers, networking companies, and data center operators. So even news that Microsoft is reducing thousands of jobs didn't hurt the market sentiment so much, but investors largely viewed it as another example of large technology companies becoming more efficient while continuing to heavily invest into AI. Now, at the same time, Broadcom's actually expanding partnership with Apple reinforced the idea that AI spending remains one of the biggest themes in the markets right now. And now, outside of the company news, the macro picture has actually improved slightly. So investors are now actually looking ahead to the next Federal Reserve meeting minute and searching for the clues about when interest rates could eventually begin moving even lower. So inflation has actually continued to cool compared to last year, but it's still not completely under control, and that means that every major economic report is watched very closely. So Treasury yields still remain one of the biggest risks for crypto, and if yields actually continue rising, it makes borrowing more expensive and can put pressure on both technology, stocks, and crypto. So for now, market is seeming comfortable with the current outlook, which has helped support the latest rally. And now let's move over to crypto, because this is probably been the most interesting part of the last few days. So after a difficult June, Bitcoin has actually managed to recover significantly, climbing back toward the mid $60,000 range. So several factors actually contributing to the rebound. The first, we have the institutional demand appears to be stabilizing as spot Bitcoin ETF flows improve after weeks of weaker activity. So as you can see, currently we're getting about 250 plus million inflow a day, which is very, very good. Last week or so, actually, we're still getting outflows. I believe one of the days we actually did get nearly about 700 million in outflows, which was insane. And now we are getting some steady inflow, which is very, very nice to see, and a very nice transition overall. So secondly, we have a large number of short positions that have actually been liquidated. So in simple terms, so traders betting against Bitcoin have actually been forced to buy back their positions as prices moved higher, adding fuel to the rally. Ethereum has also actually performed very well during this recovery, with many investors actually rotating back into higher risk crypto assets. And now we're also seeing performances from several large major cap altcoins, including Solana, Cardano, Stellar, and Zcash, all benefiting from the improving market sentiment. So the on-chain data actually does suggest that while retail investors have been buying this recovery, some larger holders have been taking continued profits. That doesn't necessarily mean the rally is over, but it does actually suggest that we could continue seeing higher volatility over the next coming weeks. And now another interesting aspect is that the overall market sentiment hasn't become overly optimistic yet. Despite obviously prices moving higher, as you can see on all of these charts, many investors are still actually approaching the market very cautiously, which often happens after major corrections. And now energy markets have also seen much calmer situations. So oil prices have actually stabilized after recent geopolitical tensions eased, reducing fears of major supply disruptions. And that's important because lower and more stable oil prices actually do help reduce inflation pressures, which is generally supportive for both stocks and cryptocurrency. And now gold has also remained relatively steady as investors continue maintaining some defensive positions, but overall the mood across the financial markets has become noticeably more optimistic compared to just a week ago. So where does the market go from here? There are several major events that could shape the next move. So first, investors will be watching the Federal Reserve for any changes in its outlook on interest rates. Then secondly, we have the earnings season is about to actually begin, giving us a much clearer picture of how companies are actually performing in today's economy. And in crypto, all eyes remain on Bitcoin ETF flows and whether Bitcoin can actually continue holding above key support levels while also seeing the institutional demand improving. And now if earnings coming strong and inflation continues cooling, this risk on rally could have room to continue. But if inflation surprises to the upside or Treasury yields begin climbing again, we could quickly see the volatility return. Before we finish, we have a very, very exciting opportunity for you guys on Evedex. Now, Evedex is a platform I've been using for many months now. And recently, we actually just have added funded trading. So for an entry fee of 50 USDT, you can actually get yourself a 1.5K funded account. So as you can see, instant payout, 0% profit share, no challenges, nothing like that. Very easy, very straightforward. It gives you a fantastic opportunity to obviously not risk your own capital, but also get a very nice feel for the market while also being able to catch some nice profits if you can. Now, the link for that will be in the description of this video. Overall, it's a very, very full platform. We do have many things on there, like AI trading, bot trading. You can trade crypto, stocks, Forex actually coming very soon. And then you've got gold, oil, silver, so many things to trade, meme coins as well. Obviously, we've got competitions where you guys can actually compete and earn rewards and win possibly iPhones, AirPods, Apple Watches. And then obviously we've got courses as well. There's free courses in there as well. So if you guys actually are looking to get some learning going on, then yeah, definitely check those links down in the description. And now that will be it for our market recap. So overall, the tone has actually improved. Stocks are climbing, crypto has regained momentum, energy markets have stabilized, and investors are beginning to take more risk again. So the next few weeks should be especially important as earnings season begins and the Federal Reserve provides more guidance on where the economy is heading. Now, if you guys found this breakdown useful, then make sure to drop a like, hit that subscribe button for more market updates. And as always, thank you for watching and I'll see you all in the next one.